Today, a historic investment in American semiconductor manufacturing. Int'l will spend $20 billion to build what could become the world's largest chip plant. And billionaire Mark Cuban wants to sell you cheap drugs, far cheaper in fact than the retail alternatives. We take a look at his new online pharmacy. One of America's top investment bankers warning stocks could fall 45% this year. He says we're in a super bubble. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. A red day on Wall Street today marked the third straight week of losses. In fact, the Nasdaq and the S&P finished their worst week since March 2020, the onset of the pandemic. Investors are worried about how tighter monetary policy, like higher central bank interest rates and less central bank stimulus, will affect the market this year. The Dow fell 450 points, 1 3/10%. S&P 500 lost 85 points, 1 9/10%. The Nasdaq today losing 385 points, 2 7/10%. In fact, one of America's most influential money managers thinks the stock market could fall 45% this year. Jeremy Grantham is the co-founder and chief investment strategist of Grantham, Mayo, Van Otterloo in Boston. He's credited with predicting the 90s .com bubble and the 2008 bear market. Now in 2022, Grantham says we've reached the end of a super bubble in stocks. He says it could burst any time. Here he is talking to Bloomberg News about the last so-called super bubble, which ended with the .com crash.
In 2000, yes, the Nasdaq came down 82%, which was fairly brutal. Amazon came down 92%.
As we entered the pandemic, markets tanked on the news of lockdowns, but stocks have risen dramatically since then. The Nasdaq is up over 100% since its March 20th, 2020. The Dow Jones 80% and the S&P 500 92%. But Grantham says those gains have pushed stock values way beyond where they should be. For example, the S&P is trading around 4,500. Grantham says, per his analysis, it should be much lower.
The trend line, being slightly generous, is 2,500. And most of the great bubbles, the super bubbles, go below trend.
Grantham blames the Federal Reserve for facilitating this so-called super bubble. The Fed and other major central banks cut interest rates and injected trillions of dollars of stimulus into the financial system to ease it through the pandemic. But Grantham says it won't be so easy for the Fed to step in and save the market this time as it did during previous crises.
This time trend is at most 2,500. And I would expect, even if the Federal Reserve tries to do the same, it will be hard.
So Jeremy Grantham thinks stocks could fall 45%. Joining us to discuss is Lance Roberts, Chief Strategist with RIA Advisors. Roberts helps manage over $1 billion of assets with RIA. Lance, great to see you. Thanks for coming on.
Absolutely. Thank you.
Lance, what do you think? Are we in super bubble territory?
The answer is, there's a lot of reasons to think we are, right? I mean, if we look back over the last couple of years, we've seen, record SPAC issuance, record IPO issuance. We've seen record mergers and acquisitions, record stock buybacks, just an immense amount of speculative activity in the markets from a whole variety of areas. And not to mention the market's up 100%, over 100% from the March 2020 lows. So, certainly have seen a lot of activity that would suggest that we are in a bubble type market for sure. But the problem is that really we've only recognized this as a bubble in hindsight. And just as we found out that the financial crisis, we were in a bubble prior to the financial crisis, .com bubble prior to the .com bubble, we recognize these things in hindsight because once these things come apart, everybody goes, well, yeah, it's obvious we were in a bubble.
40 to 50%, I think to a lot of people, to myself, sounds incredible, extraordinary, a massive. And we've spoken before, because there's so much leverage and margin debt in the system as well, that things can get messy pretty fast, right? How do you protect yourself, or how do you speak to your clients about protecting their wealth during these potential downturns?
Well, the thing is that we're never going to know about the correction really until it actually happens. Unfortunately, this is the way markets work. And so, there's two problems for most investors. One is they get out of the market too soon, thinking a correction is going to come, and it doesn't. And so the market keeps running up, and then they get back in right about the time the market goes into a big correction, right? And we see this throughout history a good bit. The other thing is that investors do is they think the correction's never going to come, so they just keep staying in the markets. And even when it begins to correct, they keep saying, okay, well, it's going to go back up. We've had these little dips before. It's a buy the dip opportunity. And of course, that's been one of the big kind of memes over the last, really 4 or 5 years is buy the dip. Buy the dip works until the one time it doesn't. And what will happen here ultimately is that when that correction starts, there's a kind of a forced selling into the markets as people start dumping ETFs and they start dumping individual stocks. And we get to this kind of feedback loop. So for an investor, the way to protect yourself is start thinking about where you're investing your risk and what your goals really are. Is it really trying to beat some random benchmark index, or is it trying to grow your money for retirement? And separate those two things out. We get wrapped up into the competition of trying to beat an index, but that's not our goal. Our goal is to grow our money safely over time. So think about reducing your equity risk. During a market decline, bonds, long duration bonds like U.S. Treasuries tend to do better, and they'll help protect your principal. They'll help protect your portfolio in a downturn. Also think about where you're actually taking risk. If you're going to take risk in equities, you want to start moving that more towards companies that I know they're boring, but these old staple companies that just provide steady growth and steady dividends over time will also not go down as much as the market. Look, we may not make money when the market declines, but the goal is not to lose as much as the market. So think about less risk, more stable investments, and things that actually protect capital over time. And then once the storm passes, you can always put money back to work.
Could be an interesting year. Lance Roberts, RIA Advisors. Appreciate it. Thank you.
My pleasure. Thank you.
And Intel announced today it's going to spend $20 billion to build a chip factory complex in Ohio. The global chip shortage has interrupted production for over a year, interrupted to say the least. Now, the president is praising Intel's plan as one of the largest investments in chip making in American history. NTD's Colin Fredrickson has more.
Intel announced Friday that they have chosen New Albany, Ohio, as the site of the $20 billion chip-making complex. The company plans to invest in the next decade up to $100 billion to build 8 factories in the complex. President Biden praised the decision at a White House event.
This historic investment for Ohio, one of the largest investments in semiconductor manufacturing in American history. A brand new $20 billion campus outside of Columbus, Ohio. 7,000 construction jobs.
This could potentially be the world's largest chip plant. The U.S. used to produce 37% of the world's chips back in 1990. But today it only makes 12%. Dependency on foreign chips and disruptions caused by the pandemic have led to a chip shortage in the country. Biden said that has to change.
We are going to invest in America. We're investing in American workers. We're going to stamp everything we can made in America, especially these computer chips.
Biden urged Congress to invest more in companies like Intel and making supply chains more resilient. And House Speaker Nancy Pelosi seems to agree. In a letter to her Democratic colleagues on Friday, Pelosi said the House will soon introduce its competitiveness bill. It will supercharge our investment in chips, strengthen our supply chain, and transform our research capacity, plus many other key provisions.
So a win for the president on semiconductors, but another blow to the president's COVID-19 vaccine mandates. A federal judge today shut down the president's vax mandate for federal employees. The ruling also blocks the government from disciplining workers who don't want to get the shot. Federal Judge Jeffrey Brown said the question was whether Biden could make millions of people undergo a medical procedure as a condition of employment. Under the current law, the judge said that's a bridge too far and said that there are other things that could protect the public, like masking or social distancing. This is just the latest in a series of court decisions to disallow government vaccine mandates. And billionaire Mark Cuban, the Shark Tank star and owner of the Dallas Mavericks, has launched an online pharmacy. The firm buys straight from the drug maker, which means substantially lower prices for you. NTD's Fake Quarter has more.
It all began when Alex Oshmiansky sent a cold email to Mark Cuban, pitching a low-priced generic drug company. Now they've launched CostPlusDrugs.com. It cuts out middlemen and offers drugs directly to consumers in an online retail pharmacy. The cost savings can be substantial. For example, they say a 1-month supply of imatinib, a leukemia drug, would cost $9,600 at other pharmacies, but would cost just $47 at Cost Plus Drugs.
This is a very exciting development, especially for my patients. I often run into problems getting people the medications that they need at an affordable price.
Frank Contessa is a physician at Northwell Health Physician Partners. He notes that Cost Plus requires patients to pay for drugs out of pocket, which could be a barrier to its success.
Most people are very used to using only services and drugs that their insurance company will cover. And I think that might scare away some people until they realize that the price that they're going to pay is much lower than they would have had to pay if they were using their insurance.
Mark Cuban says every product we sell is priced exactly the same way. Our cost plus 15%, plus the pharmacy fee, if any. Cuban adds he wants to end what he terms ridiculous drug pricing.
I predict that if it's not put in within the broader context of the healthcare system, ultimately it's going to fail.
Gerald Comisiong is the CEO of Todos Medical. Comisiong sees additional issues the company could face.
Patients that are just going to buy the prescription and take it and then find out there's a problem later. That's the problem. And the other problem is that many patients now are not seeing a single doctor. So they don't have one doctor who knows their whole healthcare history.
Cuban's company also plans to make drugs themselves. They're building a pharmaceutical facility in Dallas, Texas, that they plan on opening by the end of the year. Fake Quarter, NTD News.
And Netflix shares fell by nearly a fifth today. It's after executives predicted a slowdown in subscriber growth, expecting only 2.5 million new subscribers this quarter. That's about half of what analysts had expected, and below the 4 million new subscribers during the same period last year. It all comes despite a strong content lineup, including shows like The Witcher and Don't Look Up. Netflix says some potential reasons for the slowdown include COVID, competition, and economic difficulties in international markets. It's also a bad day for cryptocurrencies today. Bitcoin falling to its lowest level in 6 months, below $37,000. In the last 24 hours, CoinMarketCap says Bitcoin's price has fallen 11%. Other cryptocurrencies are also in the red, including Ether. Digital assets, in fact, have been hit hard in recent days, along with other riskier assets. Many putting it down to a tightening of monetary policy, with more pain possibly on the horizon. Russia's central bank this week also calling for crypto to be banned. We're joined now by the company offering the first 30-year Bitcoin mortgage, joined by Joseph Rupina of Milo. Joseph, great to see you. Thanks for coming on.
Yeah, it's wonderful to be here and share what we're offering to the world.
Joseph, very exciting prospect. A couple of days ago, my producers showed it to me. I think like a lot of people in this space, I was quite intrigued and excited about it. A couple of days have passed since then, and today we see an incredibly volatile day for Bitcoin. I think we're down now about 6% over the past 24 hours. How exactly does your company handle this, and does it affect the mortgage holders or even yourselves as a company?
Yeah, that's a great question. I mean, for us, when we started this company, it was really around being able to expand credit to consumers and international consumers, and we saw the same opportunity with individuals that had crypto assets. The beauty of the product and how we've structured it is by giving the opportunity for people to buy real estate with the combination of having their crypto, it does allow them to reduce some of that volatility. We do understand that the crypto component is a lot more volatile, but we've definitely, within our risk parameters, given enough room to be able to mitigate that. And obviously a consumer can add more crypto if we do get to some of those buffers and those levels. But the idea is to structure it in a long-term way.
What's the big advantage then? Is it for tax purposes? If I'm holding Bitcoin, it's appreciated over the past, let's say, 4 or 5 years. Instead of cashing it out and having to pay taxes on it, can I take out a mortgage against it for tax-free?
Yeah. So there's two really main benefits to a product like this. One, as you alluded to, was the element of being able to think about the potential impact of selling an asset, in this case, selling crypto. And if you're sitting on gains, it would likely trigger tax events. Now, that depends on your particular country, your jurisdiction, your state. So that would be something for your accountant and tax advisors to give you the definitive answer. But yes, we believe that it should mitigate some of those elements of potential tax impact. But most importantly, it is the opportunity cost of selling an asset that you want to keep, that we all believe will continue to appreciate over time, that if you sell it today for that down payment, you will lose that opportunity cost. So we're trying to really mitigate against both of those factors. And by combining this into this transaction that we're offering, is this person is going to qualify for that mortgage as well, which also has been somewhat difficult over the years for individuals with digital assets where the banks are not really considering that. So these are all very, very important characteristics.
Has it been popular offering so far?
The demand has been off the charts. So we couldn't have ever imagined the amount of interest for this. And
what type of people, Joseph, who's looking for these?
It's individuals all over the world. So the main demand is here in the U.S., but we've seen a lot of interest globally from many different countries. And these are individuals that have wealth in Bitcoin for a long period of time, or there are individuals that see themselves having a bigger percentage of their net worth in digital assets and looking at this as a way to create wealth and be able to qualify to purchase a home. So,
do they want to buy apartments there in Miami?
Absolutely. I think a lot of people want to be buying properties in Miami. We've seen that with our international clients wanting to buy properties in the U.S. and it still highlights how incredible the U.S. is as a place to invest in.
Of course. Joseph Propina, Milo, appreciate it. Thank you.
Yeah, thank you very much. Appreciate the time. Take care. Bye-bye.
And struggling Chinese property developer Evergrande says it's hiring more financial and legal advisors to help with its debt. The move comes after a group of international creditors threatened to take legal action. NTD's Con Fredrickson has the details.
Evergrande said Friday it's proposing to hire 2 Chinese firms as financial advisors and a law firm as legal advisor to help deal with debt. That's according to a stock market statement.
This is the beginning of a long working out of the problems of a kind of overheated Chinese real estate market.
Evergrande's move comes after a group of its overseas bondholders threatened legal action over what it calls Evergrande's opaque debt restructuring process. James Nolt is a political economy expert. He thinks this could be the beginning of a more general real estate crisis, partly because a lot of the Chinese property developers are funded by foreign money.
Even if there could be Chinese banks that might, for example, be willing to overlook the condition of default, perhaps because of policy reasons, the foreigners are not willing to do that. They want to get paid for money they've lent.
The international creditors say they've been left in the dark about the company's plans. After talking with Evergrande, they only received little more than vague assurances of intent, lacking in both detail and substance. Nolt says even if Evergrande tries to reschedule its loans, that might not work because it has to have some basic solvency. And he says some of these companies are trapped in bad investments.
It's not clear how much solvency they have, and without let's say a major government bailout to cover their losses, there might not even be the funds. Even if you stretch out the payments, there might not be the funds to really cover any kind of a program that would be satisfying to the creditors.
Nolt says after years of expanding credit and hiking prices, he thinks there has to be a reckoning, and China's time is coming. Colin Fredrickson, NTD News.
With that, we're going to take a quick break, but still to come. A new survey says most Americans would have to borrow to cover unexpected expenses. How is inflation impacting Americans' ability to save? And Chanel opens a new complex showcasing French luxury crafts. What do the artisans have to say about the new space? That and more coming up on NTD Business.
Hello, I'm Mike Lindell, CEO of MyPillow. Cancel culture has not only affected myself and MyPillow, but also millions of you out there. My employees and I want to personally thank each and every one of you for all your support. At MyPillow, we have hundreds of products now, including my new slippers, bathrobes, sleepwear, and my new beds. We are offering the best products ever for the best prices ever. For example, we have the standard size MyPillows, regularly $69.98, now only $19.98 with your promo code. Or you can get custom fit with my premium queen size MyPillows, regularly $79.98, now just $29.98. Or my king size, regularly $89.98, now just $34.98. So go to mypillow.com now and use the promo code on your screen or call the 1-800 number below to receive these exclusive offers. Thank you and God bless.
At The Nation Speaks, we don't just scratch the surface. We want to go wide and deep. Our viewers come away with a much richer understanding of the issues of the day. We really make a big effort to bring on different voices onto the show. We don't just talk to experts and newsmakers, which of course are extremely important, but we also want to hear from the American people. So the people who are impacted by the policies and issues that we're talking about, because what they have to say is just as important to the national conversation.
Welcome back. Inflation. It's impacting how consumers spend their money on everyday products, but also how they save. A new Bankrate survey reports that most Americans would have to borrow in order to cover an unexpected $1,000 expense. NTD's Andrew Thomas reports.
According to a new Bankrate survey, just 44% of Americans would be able to cover an unplanned $1,000 expense using their savings. But that number's up from 39% last year.
The good news is this is actually higher than it's been in any of the previous 8 years that we've looked at this. The bad news is it still means that more than half of Americans are in a position where they can't cover that $1,000 expense out of savings and would have to resort to something else.
But inflation has impacted consumers' ability to save. About 35% of Americans said they would need to borrow to cover a $1,000 unplanned expense.
Inflation is straining household budgets, and we find that nearly half of households, 49%, say that inflation is causing them to be able to save less for those unplanned expenses, and that savings is sorely needed.
20% of respondents said they would use a credit card to cover an unplanned expense. But according to McBride, that's a costly strategy.
Not only is this the highest cost debt that most households have, but we're talking about interest rates going up over the course of the next year or two. So the burden of that debt is only going to grow as time goes on.
The ideal emergency fund should last 6 months, but that can be a struggle. So individuals should get into the habit of saving.
The best way to save is to automate it and make it happen first. Set up a direct deposit from your paycheck into a dedicated savings account, much the way that you would save for retirement through a 401k. That way, the savings, it happens automatically before you even roll out of bed on payday morning.
Not only has inflation highlighted the need to plan out savings, but the pandemic has shown the importance of having funds to turn to for an unexpected expense. But for nearly half of Americans, inflation remains the main concern for saving. And more than half of millennials and Generation X cite inflation as holding them back from saving. Andrew Thomas, NTD News.
And as difficult a year as 2021 was, a lot of people were apparently in the mood to celebrate. The world bought more champagne last year than ever before. We're talking billions worth of bubbly. Sales and exports set new records despite pandemic lockdowns that forced the closure of many bars and restaurants. One trade association says France exported a record 180 million bottles of champagne last year, a 38% increase over 2020. As for global sales, they hit a record too, totaling $6.2 billion. The numbers are surprising, considering tourism and event planning have been down. In a statement, the Champagne Committee offered a possible explanation. People are just drinking more at home. And fashion brand Chanel is opening a new studio complex in Paris. It houses around a dozen prestigious workshops that create handmade crafts for couture houses and luxury clients. NTD's Don Ma takes a look.
Chanel opened 19M, a new studio complex that houses 600 employees from 10 accessory suppliers. The workshops there create shoes, gloves, hats, embroidery, feathers, fabrics, and other handmade crafts. One of them is Maison Masserot, a shoe workshop founded in 1894.
The workshop was adjoined to Chanel in 2002, and now we have a new home in 19M. And we're delighted because there's a lot of space, a lot of light. And we can work easily with other artisans because we're in the same place. So we often work together in collaboration for clients or for the designers.
Maison Masserot's collaboration with Chanel dates back to the 1950s. It had helped Gabriel Chanel create the classic black toe-tipped slingback. One of Masserot's shoe pattern makers says, now that they're in this new complex, they can easily design shoes with embroidery, flowers, or buckles by calling on other artisans in the complex.
We would have this magnificent place with a lot of light. We have huge ateliers with all the new technologies. So for us, it's really wonderful. I think there's no other atelier like this in France. So it's a real opportunity.
Maison Lissage is a workshop that creates intricate embroidery works for the top couture houses. Its artisan director says it's an enormous gift for them to be able to work in the new space.
It was ordered by Chanel to put together several artistic professions and to create synergy between them. It is really amazing because if you need to work on jewelry, for instance, with Goussins, you don't have to cross from one side of Paris to another. You just knock on the next door and it's done.
The triangular complex is 270,000 square feet in size and was designed by French-Italian architect Rudy Ricciardi. It's located in northern Paris in the city's 19th district. The name 19M in French can also refer to the 19th district. French President Emmanuel Macron officially inaugurated the building Thursday afternoon.
And plans have been launched for a unique new film studio, one that will get Hollywood stars a lot closer to the actual stars. Variety magazine reports that Space Entertainment Enterprise, that's the company co-producing Tom Cruise's upcoming space movie, plans to launch a zero-gravity production studio. On top of that, the company wants the module to contain a sports and entertainment arena, as well as a content studio. It's called SEE1. The company is planning to build it by December of 2024. And the Sky High studio will host anyone entertainment and sports who wants to work in a low-orbit microgravity environment. All those who can afford it anyway. The Enterprise, or SEE, will also produce its own content and host its own events. Axiom Space will handle construction of the studio. That's the same company that last year won NASA's approval to build a commercial component, the International Space Station. It's a whole new world. As the latest business updates for today, you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you on Monday.
Thanks for watching us on YouTube. Did you know YouTube only keeps selected videos on its platform? So if you want to make sure you get the full picture, just subscribe to our newsletter. Go to newsletter.ntd.com and sign up. It's free.